Hi, everyone. Thanks for joining today's webinar. My name is Dave Mantell. I'm a managing partner with Stabler Wealth Management, and I will be your presenter today. So today's webinar is one of our most popular ones, which is the Boeing retirement timeline. And so whether you're 3 weeks from retirement, 3 months, or even 3 years, you are at the right place. This is the right webinar for you. We're going to cover a bunch of great material, both in the near term and longer term items to be focused on. And so with that, I will share my screen and we will jump right in. Okay, yeah, so to kick off again, the Boeing retirement timeline. For the agenda for today's meeting, we're going to break it up into a few different sections. So first off, we're going to go over some key steps to take ahead of retiring from Boeing and specific timelines to be focused on there. With those timing considerations, in addition to administrative timeline, we'll also go over some strategies to really hone in on that last final stretch. And then finally, we're going to spend a section on actions to take as you start closing in on retirement that can really be a difference maker in setting yourself up for a terrific, nice, smooth retirement on your terms. So we'll make sure to put some attention there as well. And, as I've mentioned before, I fully believe the last couple of years going into retirement are some of the most important financial planning years of your entire career and life for that matter. And, there's a lot of focus on, okay, when I'm retired, I need a financial planner. I need to get my uh, gaming gear. I'm about to pull the trigger. But really, for anyone tuned in right now, that might be a couple years, 3 years from retirement. That is a sweet spot where we could make some small changes that will really move the needle on your retirement success and your picture overall. And so ahead of jumping in, just a couple points about us. So at Stabler Wealth Management, we specialize in working with Boeing employees and retirees. Our full focus is getting you prepared for retirement, planning for it, helping with that transition to retirement, and then afterwards living that successful retirement. As a firm, we've been working with Boeing employees for 35 years. So we know the plans and the ins and outs like the back of our hand. So we really focus on that. And we have a team of experienced certified financial planners, CFPs. And so all of our planners are fiduciaries, which is something we really think is important for anyone that you work with. And in general, our real focus is personalized service and care. We want to make sure what we're doing caters to your needs, your goals, what's important to you. And so we are not one-stop shop at all, and believe that personalized advice is really what's important. And so with that, we will kick right into our presentation. Okay, so starting with timeline, a couple key administrative type items there. So there's a couple components timeline-wise. The first one is selecting your retirement date. And so what this means is really you want to work backwards a bit and choose that date in terms of when am I going to retire? And from there, we could work back in terms of what steps you need to take between now and then. And so even though you're likely mapping out your retirement, weeks, if not months, if not years before your retirement date, when you actually submit your termination from Boeing is a process where you log in online and do that within 2 weeks, so 14 days of your retirement date. And so, of course, you likely will inform your manager and your team, more than 14 days out and sort of plan your timeline. But the reality is, in terms of actually going in the system and entering your termination date, that happens in that final 2-week stretch there. When we think about your commencement date, that is different. So commencing is when you turn on your pension or your lump sum pension, for example. And so you cannot commence your pension until once you're retired. And so if you're going to retire at the end of November, again, a couple of weeks before, you'll submit your retirement paperwork and termination paperwork. And then the earliest you could commence your pension would be December 1st. So it's always the first of a month. And so again, whether that's a lump sum or the annuity, that happens after you terminate. And by the way, you don't have to commence your pension that following day or that first of the month after you retire. You can wait a little bit, and there's a couple of situations where that might come into play, which we'll hit on here momentarily. Okay, so we went over your retirement date. So with the pension commencement date, like we're noting, that happens on the first of the month. Regarding the paperwork and logistics, you will actually fill out a packet and submit it, old school mail, and send it in to commence your pension. You know, there is an online option, but this is one of those where I think it's nice to have a paper copy. It's a pretty hefty packet. You could kind of pour over it, make some notes, dog ear a couple pages if you need to. And so this is one where I do recommend ordering the paper copy and make sure you're certifying the submittal so you have all the paper trail on that. And so you could request your commencement packet up to 90 days prior to commencing your pension. So again, whether that's starting your annuity, if you choose the annuity route, or commencing and flipping on your lump sum if it's a lump sum route, you could choose request your packet 90 days beforehand to receive that. Once you get your packet, the deadline to submit it is actually not until the 20th day of a month before commencing. So in that prior example, if you're going to turn on your pension and commence December 1st, technically it's November 20th of the prior month when you need to submit it by. But this is one of those where I think it's good practice to submit it about a month in advance. So if you're commencing December 1st, maybe start in November, send it in. That way, if there's any administrative issues or snafus that come up, you're not scrambling last minute to make sure everything's in line. So that is one that I'd make sure you have it, ordered nice and early. You have time to pour over it, and you submit it with a little bit of breathing room. And so when we put that all onto one screen, this is sort of what it looks like, right? So in those shorter bars, you have your retirement date. Choose that retirement date, and then 14 days prior within that period, you'll submit your termination from Boeing. Regarding the commencement, so again, this is when starting your pension, receiving your lump sum. You cannot start it till after you retire. So the earliest is the first of the month following your termination. And however, you can request the packet 90 days before you commence up to, and you could submit it early as well. And so again, looking at this timeline, our recommendation is circle that retirement date, pick your expected commencement. And so I think as a starting point, probably starting that first commencement opportunity, the first of the month following your retirement. Request your packet 90 days early with that commencement date. Lay it out on the kitchen table, fill it out, and then probably about a month before commencing, so let's call it 30 days or so, is a great time to submit that. And so really anyone, probably everybody on this webinar right now that has kind of an idea of when they're retiring, I recommend pulling out the calendar, circling that retirement date, and working backwards from there. And like I noted, you don't have to commence right away. There's certain scenarios I'll get on in the following slide where it may make sense to wait a little bit to commence. But you could always request that commencement packet with the first commencement opportunity. And if it makes sense to wait to start your pension or lump sum, more likely, you could tear that up and order a new packet. So it doesn't hurt to kind of get the ball rolling there. So a little foreshadowing. So getting the most out of your pension benefit, there's a couple of details to be thinking through. And so especially when you do the lump sum, commencing in December versus January can make a huge difference on your numbers. So the way that the lump sum calculation works for those going down that route is it's based on a couple factors: what your pension benefit is if you did the annuity, your age, mortality rates, so how long the actuarial folks expect you to live, and where interest rates are, so specifically segment rates. And so when you put that all in a pot and mix it together, voila, you get your lump sum benefit amount. The real needle mover on this is what interest rates are doing, so segment rates specifically. And we saw that big time in the last handful of years. And so in this chart here, this is an example of someone that had $1 million lump sum benefit in 2020. And so if they retired in 2020, they would have received an $1 million lump sum. As you can see, year to year, that amount changed mightily. If they were to retire in 2021, that means their lump sum calculation would be based off of prior November's segment rates. So November of 2020. You guys might remember 2020 was a COVID year. A couple of fireworks there. The economy ground to a halt. As a result, the Fed lowered interest rates to 0 to basically boost the economy. And as a result, segment rates went way down as well. And so anybody retiring in 2021 enjoyed the November 2020 segment rates. And so you got a boost from what was already a good lump sum number of a prior year by 67,000 in this case. So that $1 million in 2020 retirement would have been, $1,067,000 in 2021 if they retired and commenced their lump sum then. In 2021, interest rates went up a bit. The economy recovered. So if you retired in 2022, your lump sum would be about 40,000 less than if you retired in 2021 in this example. Fast forward to 2023, another big change. 2022, you might recall we had, some of the highest inflation we've seen in 40 years. As a result, the Fed upped interest rates significantly. And so November 2022, interest rates were way higher than the prior year. So anybody retiring in 2023, that was based off those high 2022 segment rates. And you could see that is the whammy, right? In this scenario, that poor person's lump sum went down 270,000, nearly 30%, from $1 million in this case to, not much over $700,000. And so that was a big deal. In reality, we talked to some folks where this is what their numbers looked like. We met with someone who wasn't keeping up, wasn't watching our webinars apparently, and so they weren't aware of all the impact. And so they planned to retire in 2023. They did not pull the trigger early in 2022. And as a result, their lump sum got hammered and they lost hundreds of thousands of dollars. Nobody wants to work for free, right? You especially don't want to pay your employer to the tune of $300,000 to work a few more months, right? On the flip side, there's things you can do. We had some clients that said, hey, I'm going to retire a little bit earlier. In some cases, went back in a consulting type role to trigger that higher lump sum because it was such a meaningful boost. As we look at this year versus next year, again, if you retire this year, whether it's December 1st or it was January 1st, it's based on the November 2022 segment rates. Right now, segment rates are not that different from where they were at the end of last year. And so it'd be a nominal difference commencing January 1st of 2024 versus December 1st of 2023. However, going back to that timeline slide, if you plan on retiring at the end of the year, probably a good idea to request your commencement packet now with a December 1st commencement date if you're taking a lump sum. You could wait until probably the start of November to submit it. And in the next month and a half or so, if interest rates go down a lot, maybe you want to tear that up and order a new January 1st commencement packet. And so, really, we're in an environment where things are changing quickly, right? Interest rates have been all over the board this year. Recently, they've been pretty high. And so we will keep the information coming where things are tracking, but we do have a calculator that we run. And while segment rates are published at a bit of a lag, they're based off other key interest rate benchmarks. And so we're able to have a pretty good idea real time in terms of where the segment rates will be. So we're happy to run the math with you. So don't hesitate to reach out if you're kind of towing the line on this timing on when to commence your pension. We could look at some scenarios. But again, as of now, if you're going to retire at the end of the year, would probably suggest ordering the packet with a December 1st commencement date if you're doing the lump sum. And then we could kind of see and run the math in the next month and a half or so and see if it's worth pushing out your lump sum commencement by a month to get a more favorable potential segment rate and a much higher possible lump sum. So time will tell. But as of now, as of today, not much of a difference likely between 2023 and 2024 commencement lump sum numbers. Okay, a couple other considerations, and this goes for both a lump sum and the pension amount. So starting with a lump sum, a couple key numbers to think of. So after age 60, you're kind of through the bad age penalties. So before 60, every year you waited, you got less of a penalty for taking your pension early. And so your lump sum would go up a little bit, all other factors aside, by waiting. Once you're 60, your lump sum's likely to go down each year because based on the math, you're expected to live 1 year less, right? When they're determining your lump sum amount, they look at your age, the mortality tables, your pension benefit, and say, okay, here's how much we need to give you to equal what your pension would be based on current interest rates. And so every year that you live past 60, that's one less year they need to equate to with a lump sum piece. So they could give you a little bit less lump sum. Before 60, again, you had less of a penalty for taking early that offset that. But at 60, there's not a mathematical reason in most cases to wait. Another factor, until you commence your lump sum, if you're going that route and receive it, it's not earning anything, right? Your lump sum's kind of like cash, so it doesn't go down with the market, but it doesn't go up with the market either. And so that's another reason where someone might say, well, it looks like December 1st versus January 1st, segment rates might go down a little bit. I'm going to just wait until, as late as possible and commence in January. Yeah, you may not lose much in terms of risk of interest rates, changing much between now and then, but you are missing out on, a month or a month plus of potential interest payments or investment gains. So there is an opportunity cost there too, where your lump sum's not earning anything until you take it and invest it, right? For those that are taking the annuity rather than the lump sum route, if you're under the age of 65 and you retire, you should start your pension right away. You do not want to miss out on pension payments by waiting to commence. If you are age 65, you won't miss out on payments because what happens is once you commence, they will kind of make up for payments that you missed between retirement and commencement date if you're the age of 65. For example, we did have one client, they had a really big tax year. In addition to working the full year and having wages, they also had sold a property, for example. And so they were like, gosh, I'm going to be in a really high tax bracket this year. I'm going to wait to commence my pension annuity until January of the following year. That way I'll get a bigger, initial payment making up for those months I missed between retirement and commencement. But they'll show up in next tax year. So I could kind of defer it and stack it. And so there might be some one-off cases, you could explore where that would make sense. But again, if you're not 65 and you're taking the annuity, start it as soon as you retire because you don't want to miss payments. They don't make up for those missed payments. And by the way, we have pretty favorable tax rates right now. And so for most folks, even though you're working this year, you likely won't get hit too hard by starting your pension right when you retire. So there could be a time and place, but typically it's good to start that annuity right away. Okay, so now that we've gone over sort of the logistical timeline and gone over some factors regarding the pension and commencement timing, there are a couple other key timing considerations to really think about. The first one is retirement health insurance. So this is a big, big deal. For those that retire early from Boeing and were last hired before 2007, generally you will be eligible for the early retirement medical. That basically means you'll continue to get a sweetheart of a medical plan on Boeing's dime until you're age 65 Medicare age. And a lot of folks from Boeing, put in their time, right? They've been there 30, 35 years. And so it's really common where folks will retire in their 50s. And so that's a huge deal. If that could be, if you retire at 55, for you and a spouse, that could be 10 years of health insurance covered at a subsidized rate versus having to get private insurance. So that's a big deal. I highly, highly recommend that you confirm with your HR lead that you are covered, because you don't want to get surprised here. That could really change the calculus on your retirement timeline. We have one client, so they worked at Boeing for a number of years. They briefly left on a hiatus and came back, and they missed a rehire date by 1 month. And so they were not eligible for the early Boeing retirement medical. This client retired at 56. His wife did as well. Fortunately, they were aware of this, so we could plan around it. But again, it's not always a foregone conclusion. It's worth confirming whether you get that early retirement medical or not. If you do qualify for it, make sure your spouse is on your insurance plan before you retire, as well as any dependents for that matter. Your spouse might be working, for example, and he or she may have good health insurance for their employer, so they might be on their own medical. Once you retire, before pulling the trigger, make sure they are added to your medical plan so they could enjoy that early retirement medical as well. If any of you are slapping yourself on the forehead and say, oh my gosh, I was last hired after 2007, I don't think I get it. It's not an absolute deal breaker. During the COVID period, there was a big change to private health insurance where it used to be like a cliff. If your income was higher than a certain amount, and it was a pretty low bar, like $60,000, you were getting hammered with health insurance premiums. Now there's a lot more flexibility where your premiums are based on what your income level is. And so that couple that I mentioned, we were able to do a lot of great health insurance planning by utilizing and managing their taxable income. And so it wasn't all that bad. They were able to maneuver around it. But this is something you need to know going in and really important to plan for, because it can be a big time needle mover, right? If you're having to pay an additional, 20,000 a year in insurance premiums, and that could be it in certain cases for 10 years, right? So it's something to really map out, and we'd be happy to help come up with a game plan on that, because there is a way. Another item is if you turn 65 before your spouse, when you go into Medicare, so when you're 65, you need to go on to Medicare. You have the option to do the Boeing supplemental plan. And what this means is that you pay extra for kind of some supplemental coverage that Boeing has kind of a hookup on or an agreement on. And by doing so, your spouse can continue on the early retirement medical, even if they're not Medicare age yet. If you turn 65 and you don't choose a Boeing supplemental, your spouse can't stay on the early retirement medical. And so it's really important, at least until they're 65 as well, you're going to likely want to sign up for that Medicare supplemental Boeing plan. By the way, it's a good plan. For a lot of folks, it makes sense to have. It's sort of like a Cadillac, especially drug prescription plan. But in certain cases, if you're using it, you may want it anyhow. But a lot of folks determine they don't need it and it's not worth paying the extra. But you probably want to wait till your spouse is on Medicare age too. Okay, and another benefit key is use your personal days. So I should have added this on the timeline slide, but for your vacation days, those pay out in full. And most Boeing folks have kind of an extra date, right? here's my official retirement date from Boeing. Here's my 2 months of unused vacation I'm going to apply. And then here's my last day I'm actually in the office, right? Because you are able to do that, and that way get paid for those additional days and receive the benefits. Um, for your personal days like sick leave, that only pays out at about 25 cents on the dollar. And so, really, you want to use those as much as possible. You are not allowed to just use those like you do for your vacation days, right? And kind of extend your retirement date accordingly. And so, for those that have a year, 2 years, 3 years till retirement, these are personal days. They're not just sick days. Spend some time with a parent, that may have some health issues to help them. Mental health days, things like that. And so really encourage using your sick days, your personal days, to get full pay on those. Because otherwise it's limited to, half of your unused sick leave at a lesser rate of your rate, or $40 an hour. So again, it comes out to about 25 cents on the dollar. And by the way, with the change to Fidelity, they don't do a great job of breaking out personal days versus vacation days. So again, reach out to your HR lead to get a breakout, because they are different. You want to look under the hood on that. Okay, so now that we've gone over timeline, we've gone over some kind of key timing decisions to make and ways to really stretch out and utilize your benefits. Here's a couple things that you want to be doing in that past or final stretch to retirement to really allow you to, again, kind of spread your wings and soar into retirement rather than crashing into it. We want to transition to retirement as gracefully as possible. And so the first thing is review your Boeing benefits. Any of you that have listened to our webinars before, you probably heard me talk about this retirement tax headlock metaphor so many times. You probably feel like your neck hurts, right? You feel like you've been in the headlock yourself. But again, it's a real deal thing. So again, to kind of repeat, we see it time and time again where somebody retires from Boeing. They were pumping money into their traditional 401k. They either have a lump sum or a pension. They have Social Security they paid into. But all these buckets are taxed as ordinary income when it comes out. And much of that, you're going to be forced to show a certain amount of income. Once you're 73, you have to take a certain amount from your retirement accounts, whether you like it or not. And so for many folks, they're in a higher tax bracket when they're retired versus when they're working, especially because the tax rates are set to go up in a few years. On top of that, imagine you're retired, you have your normal income, and you need to fix a roof, or you want to do a renovation, or you need a new vehicle, or you want to help out a grandchild. Any funds you tap for that, you're going to be taxed as ordinary income on. So that might push you into an even higher tax bracket in those final years. And so we are big advocates on tax character diversity. In those final years, we want to build up your Roth accounts, build up your non-retirement accounts, and not just have everything funneled in a tax-deferred account. And that could be a huge deal in terms of flexibility in retirement. For those of you that are retiring now or coming up soon, you have a great chance to do this, by the way, in those early retirement years before you're on Social Security, before you have required minimum distributions from your retirement accounts, where we call these a gap years, where we might be able to convert some funds from, traditional 401k IRA to Roth. So it's not too late there. Another thing is, even if you're in that last push until retirement, if you have excess in a savings account or excess in a brokerage investment account, you might want to look at this as a chance to supercharge your contributions and maximize your benefits. So while your traditional or Roth 401k contributions are limited at $22,500 a year, $30,000 if you're age 50 or above, with Boeing, you have that after-tax bucket where we could do that mega backdoor Roth, and you could put an additional $30,000 or so into that 401k and then move it to Roth right away. And so that's a great way to supercharge and add a lot to your tax advantaged accounts in those final stretches till retirement. including what Boeing puts in, you're able to have 73,500 go into your 401k for 2023. So there's a lot of space there. And we love looking at that in terms of maybe upping your contributions in those final months until retirement. That means less money's hitting your bank. So you're going to spend that from less tax favorable accounts to get more into that Roth, more into the backdoor Roth. And so these are all great tools, right? Using the VIP match, your health savings account, mega backdoor Roth that can really set you up for a fantastically flexible, bit of a tongue twister, retirement setup. And then another key planning element is before retiring across the board, it is absolutely critical to already have a game plan on how you're going to take income in retirement, how your portfolio should be invested, how you're going to manage taxes. So you want to do this trial run before you actually are retired. You don't want to say, hey, I'm ready to retire. I think my numbers are good. I'm going to pull the trigger. Now, how am I going to do this? And so again, you want a really nice, clear blueprint before pulling the trigger, just so there's no surprises, right? And so that's something we feel really strongly on. There's a couple key age dates to think about with retirement. So once you're 59 and a half, you could tap your IRA without penalty, without an early withdrawal penalty. Once you're 55, there's a way to tap your 401k without an early withdrawal penalty. And so these are all key considerations when figuring out retirement income on how to blend that together. I had that health insurance example earlier, right? And so it's another one where we'll want to really manage how your income is showing to come up with a good, concise retirement plan that makes sure the most amount is going in your pocket, the most amount net of tax. I have a little note here on NUA, net unrealized appreciation, with your Boeing stock. Before COVID, when Boeing was at $400, this was a hit, right? And basically, it's a way to move Boeing shares out of your 401k into a non-retirement account with minimal tax implication. It could still make sense if you plan on keeping a certain amount of Boeing, especially if you've been, buying Boeing shares in your 401k throughout your career, right? So again, the stock's still up a lot in the last 30 years, even though the last, handful haven't been that kind. And so it's something to look at, but not every case. But for those that want to keep Boeing and have held some in their 401k for a long period, this could be a really nice tax planning strategy as well. And so to kind of piggyback on that last slide, complete that trial run of your retirement plan before pulling the trigger. This is incredibly important. You have one shot at retirement and you've never done this before. And so it's really important to get it right. We highly recommend working with a certified financial planner, so a fiduciary, to help you complete this trial run. And we'd be happy to meet with you as well. And so again, you don't want to be dusting off your resume, right, in a couple months. You want to be working with someone that's done this before and knows how to do it, because it's just too big of a decision to get wrong, in our view. The way that we do the trial run is we have a software that we use where we can map out your retirement income plan, looking at investment strategy, tax strategies, purchase plan during retirement. And what's nice is there's also stress tests you can apply. What happens if we have a down market? What if this happens? So it's really good to run a robust plan for that. Yeah, for those that have attended our webinar before, take us up on a free second opinion on your investments and retirement plan. For attending, we're offering a free complimentary 1-hour session. And especially anybody looking to retire within the next 3 years, I recommend you take us up on this. We'll help review those key financial decisions specific to your own personal financial picture, as well as provide some great feedback on action items to be doing now like we've covered in the presentation so far to set yourself up for financial plan. I know we've covered a lot of material today, so it might feel like a bit of a fire hose, but this is a great way to sort of sum it up and go over, hey, what matters for you, and what are the key elements to be looking at. You can contact our office to schedule this. You can email us at team@stablerwm.com or at our phone number at the bottom of the page, 425-646-6327. Also, go ahead and visit us on our brand spanking new website, www.planyourboeingretirement.com. There's a nice big orange button at the top of the screen that says Let's Talk. If you click on that, just type in, hey, attended webinar, would love to meet with one of your financial planners for the complimentary session, and we'll get that scheduled. You could put the message in and hit submit, and we'll follow up with you. Or there's even a link to our calendars where you could just book that at your convenience too. So really recommend you take us up on that. In addition, we're going to record this webinar today and put it on our website. So if there's anything you want to go over again or anything you weren't too clear on, feel free to watch it again. We're going to be holding more of these seminars and webinars in the future too. So if there's any topics that you're interested in, whether it's health insurance planning, estate planning, you name it, we'd be happy to shine a light on that. And pass this on to your colleagues. Again, we're here to spread the information and help as many folks as we can. This is a great way to introduce us to other folks that can benefit from our services or from the information that we provide. So please pass it on to others that you work with. We'd love to get more people tuned in. And of course, you can reach us on our website too at www.planyourboeingretirement.com, which takes us to our Boeing webpage. Thank you again for joining today. I really appreciate you taking the time. Feel free to reach out if you have any questions or for that complimentary session, and we'll make sure to keep the information coming. So I look forward to hearing from many of you. Take care and have a great rest of your day. Thanks.